This is the value of debenture, and one debenture is of rupees 100. So for calculation of number of debenture, we can use these two information. Number of debenture, it will be 10 lakh divided by 100, you will get 10,000. The number of debenture is 10,000, and when we multiply it with 100, their price, we will get 10 lakh, the total amount. Okay.
Okay, sir.
Okay. So 100 each means price of that debenture, and the total amount is given. So we have to calculate the interest on total amount. That is 10 lakh. Okay.
Okay, sir.
Okay. Any other question?
Yes, sir. In question number 8,
8.
how do we find capital employed?
Okay. So net profit before interest and tax is 6 lakh. Net fixed assets is 20 lakh. Net working capital is 10 lakh. Current asset is 11 lakh, and calculate return on investment. Yes.
Yes.
So, okay. What is capital employed? Can you tell me the formula by asset side approach?
So total assets minus current liability.
Total assets minus current liabilities. Very good. So if we write it like this, total assets minus current liabilities. Total assets, we can say fixed assets and current assets. Yes.
Yes, sir.
Or we can say non-current assets and current assets. So fixed assets plus current assets minus current liabilities. Now, if we remove this fixed assets, what is the formula called? Current assets minus current liabilities.
Working capital.
So we can write this. Yes or no?
Yes, sir.
And you can see here the net fixed assets is 20 lakh and net working capital is 10 lakh. Fixed assets is given and working capital is also given. So 30 lakh. Is this clear?
Yes, sir.
More question you have?
Yes, sir. 1 minute.
So you got the yes. Okay.
So I also have doubt in question number 1.
Question number 1. Okay. Yes.
So in these type of
You have
questions,
not solved this question.
yes, sir.
Tell me.
So in these type of questions, same things, I'm not able to find like how, what are the components?
Yes, I have seen this problem also in some previous questions. Yes. In debt equity ratio, you have problem with these type of question.
Yes,
Actually, I told you in previous class also that we have to see the impact of transaction. Okay. For these type of transaction, you have to understand that where the impact will be. Okay. The impact of transaction, we have studied at the time of accounting equation, if you remember.
Oh, yes, sir.
Yes. So in the same manner, we have to see here also. Okay, let me explain it to you. Operating profit ratio of Star Limited is 20%. State giving reasons which of the following transaction will increase, decrease, or not alter the operating profit. Now, the formula of operating profit ratio, can you tell me?
Operating profit by
Yes.
the net sales into 100.
Operating profit divided by net sales into 100. Okay, good. Now, what is the operating profit? How we calculate operating?
Net sales minus total operating cost.
Net sales minus total operating cost. Actually, if you say total operating cost, it will not show the impact. You have to explain all the items. You have to write the formula in detail. So, like cost of goods sold, you have to tell me separately. Operating expenses, you have to write. Okay, so the formula will be net sales minus cost of goods sold minus other operating expenses. Okay.
Okay, sir.
Or the second formula we can use, just okay. So the formula is net sales minus cost of goods sold. Let me write it so that we will understand. Net sales minus cost of goods sold minus other operating expenses. This is our formula.
Yes, sir.
Okay. There is one more formula we have used, which is net profit plus non-operating expenses minus non-operating income. Yes?
Yes, sir.
Okay. So these two formula, you have to understand, you have to see the impact on these two formula. Okay. So any transaction will have impact on either the first one or the second. Okay. So let's see. Purchase of a stock in trade. Now, can you find the impact on
So your voice is lagging. Could you repeat again?
Okay. Of stock in trade will be the impact item of trading account. Am I audible?
So you're still lagging. I couldn't get you.
Okay. Okay. What will be the impact? You have to tell me the item's name. Can you see this?
Yes, sir.
Okay. So if we see this transaction, the first transaction, purchase of a stock in trade, what will be the impact of this transaction? If we talk about the first transaction, we have purchased goods of rupees 1 lakh. So purchase will increase and closing stock will increase. Yes?
Yes, sir.
Because when we purchase goods, the closing stock will increase. Okay.
Yes, sir.
Okay. So the impact on cost of goods sold, the formula of cost of goods sold is opening stock plus purchase plus direct expenses minus closing stock. So purchase is increasing and closing stock is increasing, and this is negative minus and this is plus. So the same amount is increasing and same amount is decreasing. So there will be no impact on cost of goods sold. Yes.
Yes, sir.
So no change. Is this clear?
Yes, sir.
Okay. Now 2. The second is purchase return of 20,000. Purchase return of 20,000. Now in this case, purchase will decrease and closing stock will also decrease. Yes.
Yes, sir.
When you purchase, when you buy goods, then purchase increase and closing stock increase. But when you return the purchased goods, your purchase will decrease and closing stock will also decrease. Okay.
Okay, sir.
So what will be the impact?
No change.
No change. Very good. The third one, revenue from operation on sale of a stock in trade, 1,25,000. Okay, so the third one, sale will increase and closing stock will decrease. Okay.
Yes, sir.
Now here you have to understand that due to decrease in closing stock is decreasing, so it will impact cost of goods sold. It will increase our cost of goods sold. And sale is increasing. You understood this or not?
Yes, sir. I understood.
Because closing stock is deducted from cost of goods sold formula. Okay. So if closing stock will reduce, then our cost of goods sold will increase.
Okay, sir.
Okay. So sale is also increasing with same amount and cost of goods sold is also increasing with same amount. So there will be no impact. The last one. Fourth. The stock in trade costing rupees 25,000 withdrawn for personal use. Now, when we withdraw cost of goods sold, sorry, not cost of goods sold, only goods. When we withdraw goods for personal use, what is the transaction where it impact in trading account? Where will be the impact? While preparing final account, withdrawal of goods for personal use is adjusted from which item?
Okay. So capital.
Capital, yes, one place, capital.
So purchases.
Purchases, yes. We reduce. There is two similar entries actually. The impact is same. So there is two methods for recording withdrawal of goods. First, we deduct it from purchase, or we write it on the credit side of trading account. So if we write it in the debit side by deducting from purchase, then stock, closing stock will also decrease because you are withdrawing goods, so the closing stock will decrease. Yes?
Yes, sir.
So no impact. Now, in all the transaction, only the effect is purchase and closing stock, purchase and closing stock, purchase and closing stock. Only the third transaction you can see. In this transaction, the impact is on sale and then cost of goods sold. So the formula is operating profit divided by net sales. Yes, into 100.
Yes, sir.
Now in this portion, if you see that operating profit ratio of Star Limited is 20%. Okay.
Yes, sir.
So if net sale is decreasing by, let's say, 50,000 and operating profit is also decreasing by same amount. No, actually not. Net sale is increasing and operating profit is increasing or not? Can you tell me?
So what?
In third transaction, or read the third transaction. Please read.
Revenue from operations on sale of stock in trade rupees 1,25,000.
Yes. So by this transaction, our sale will increase by 1,25,000. Yes.
Yes, sir.
So what will be the impact on operating profit?
So operating profit will reduce.
Operating profit will reduce.
No, so it will increase.
It will increase. Actually, operating profit will not change. If we take this concept, you can see operating profit is always equals to sale minus cost of goods sold minus other operating expenses. Yes.
Yes, sir.
So if sale is, let's say, the total sale was 5 lakh, okay, and it is increased by 1,25,000. So 6,25,000 minus, if cost of goods sold is, let's say, the amount is total other operating expenses 5 lakh. Okay, so let's say the cost of goods sold was 3 lakh. Okay, it also increased by 1,25,000. So 4,25,000. Yes.
Yes, sir.
And other operating expenses was 1 lakh. So it is same. Now the profit will be 1 lakh, which is also the previous profit. If we take the previous, let's take both the situation first. In last year, let's say 5 lakh was our sale and cost of goods sold was 4 lakh. And other operating, no, cost of goods sold is 3 lakh and other operating expenses is 1 lakh. So the profit was 1 lakh. Other operating expenses is also 1 lakh and operating profit is 1 lakh. Okay. This is in the past. Now the situation changed. So our sale increased by 1,25,000. So it becomes 6,25,000. Our cost of goods sold increased by 1,25,000. So it becomes 4,25,000. And there is no change in operating expenses. So it is 1 lakh. Now the profit remains same. Yes or no?
Yes, sir.
No. So profit remains same and sale is increased. So our ratio should decrease. Yes or no? In past, the formula we used is 1 lakh divided by 5 lakh. 1 lakh was profit and 5 lakh was sale. So it is 20%. But in present, the profit is 1 lakh, but sale is 6,25,000. So the ratio will decrease. Yes or no?
Yes, sir.
Yes. So this should be the solution. But there is one actually complication here. When we take sale and it is said that our operating profit ratio is 20%, it means if we have made a sale of 1,25,000, then the cost of goods sold and other operating expenses is equal to only 1 lakh. Okay.
Yes, sir.
Is this clear?
Yes, sir.
Okay. So the impact will change here due to this assumption. Because the profit is 20%. If we have made a sale of 1,25,000, it means our cost of goods sold is lower than our sale amount. Then we are making profit. Otherwise, how we will make 20% profit? Yes?
Yes, sir.
So that's why we will increase our this cost of goods sold by only 1 lakh. Okay. So it will be 4 lakh. Is this clear?
Yes, sir.
Now our profit will be 6,25,000 minus 4 lakh minus 1 lakh. It will be 1,25,000. 1,25,000 divided by 6,25,000, which is our sale, into 100, we are getting 20%. You can see the ratio is same after taking this assumption.
Yes, sir.
Okay. Now, maybe you have a question like how we could assume that the cost of goods sold is lower than sale. Actually, if we are making a profit, then it is always our assumption that our cost of goods sold is lower than the sale amount, because otherwise we cannot make a profit. So if we are making a profit of 20%, then our cost is lower than sale. Okay.
Okay, sir.
So this is our third situation. Actually, for a simple point, we have to explain like this, but you don't have to do this. It will be that our operating profit will increase by 20% because our sale is increased. Okay. So that's why there will be no change.
Okay, sir.
Okay. Is there any other question you have?
Sir, could you also tell me the components for a similar question, but with return on capital employed?
These type of question for capital employed.
Yes, sir. Like, what are the components that will be affected?
Okay. I'm writing the component only.
Yes, sir.
So return on capital employed. The formula, can you tell me?
Yes, sir. It's net profit before tax and interest divided by capital employed. 200.
Very good. Net profit before interest and tax divided by capital employed.
Sir, you're not presenting the screen which you're writing.
Okay. Oh, it is actually, yes, I closed the window, that's right. Okay. So net profit before interest and tax divided by capital employed into 100. This is the formula. Yes.
Yes, sir.
I'm not getting your point.
So there is two sides. First is net profit, and the second is capital employed. This actually capital employed formula is inclusive of more items. So we have to remember this, that in net profit, there can be a tax, okay, and any income, expenses, this all will increase or decrease our profit. Yes or no?
Yes, sir.
So the direct impact is of tax, interest, okay, only these two things. But if income and expenses is also given, then this will also impact our profit.
Okay, sir.
Okay. Now, on the capital employed side, if there is an increase in assets, our capital employed will change. Yes. Either fixed assets or current assets. Fixed assets, current assets. This is asset side approach. So fixed assets, current assets, and current liabilities. These are the component if we use asset side approach. If we use liability side approach, then share capital, reserve and surplus, or you can say shareholder fund. And then the last one is long-term borrowings. Long-term loans, you can say. Okay. So these are the component of this return on capital employed. If there is any change on from any of these items, then it will impact our ratio. Okay. Now there is no other topic in this chapter. So our chapter of accounting ratio is complete. Okay, so now we are going to start, as you told me, comparative or common size statements. Yes?
Yes, sir.
Okay, can you tell me why you are saying that we should study comparative and common size statement?
Sir, because we have that for our project.
Okay, but for that project, you need to understand the financial statement also. Actually, I was preparing for the class and I have seen the chapter, obviously. So I'm going through the concept and the questions. So I've seen that all the question of comparative statement and common size statement are related with financial statement. So first, if you understand financial statement, then you can prepare the common size and comparative statement.
Okay, sir, we can start with that.
So we should start financial statement.
Yes, sir.
And what about the balance part of partnership?
No problem. Whatever you can, you are giving the statement, you can give. If anyone is asking, I will have. That's fine.
What about the balance part of partnership?
I don't understand the balance part. The remaining chapters in the book, sir, you're asking about?
Yes, balance of partnership.
What you are doing now?
Sir, in our school, they just did the first chapter from that, and they are doing the ratio analysis.
Actually,
The third.
there is some background noise actually.
Yes, sir.
Okay. Yes, tell me now.
So actually, in our school, they started with the first book. They did only one chapter. No, they did two chapters from the first book, and now they're continuing with the third book, the analysis of financial statements.
Okay. So only two chapters you have to complete in partnership for your term and examination, I think. Yes?
Sure. And this is the two are green or amber.
Okay. So which two chapters? The first one, fundamental and goodwill?
Yes, sir.
Okay. Good. So let's start with financial statement. Okay, so financial statement. Now, for this financial statement, you have to remember a little bit of class 11th final account. Can you tell me the component of final accounts?
So trading account, profit and loss account, and balance sheet.
Yes, the first one was trading account. Second one was profit and loss account. And the third one was balance sheet. After all these, we have to do some adjustment. Yes?
Yes, sir.
Okay. Now we have to study financial statement. In this, there is only two components. The first one is the statement of profit and loss. And the second one was, it is balance sheet. Okay. So there is two component in financial statement that we have to study. The first one is statement of profit and loss. Then second one is balance sheet. Now, balance sheet is similar in nature, but the format is changed. We were preparing our final account in vertical format. This was our format of all the accounts like trading account, profit and loss, balance sheet, all. But in this, we have to prepare like this. This is called vertical format. This is called horizontal. And this is called vertical. Okay.
Okay, fine.
Okay.
So still.
Okay. Now what we do here, we write, there is debit side and credit side. We write all the expenses on the debit side and we write all the income on the credit side. If we are preparing a statement of profit and loss, income will be here and expenses will be here. After that, we will deduct our expenses minus from income and then we will calculate net profit here. So this is our format of statement of profit and loss. If we are preparing balance sheet, then liability side will be here and asset side will be here. Okay.
Deployed.
Okay, sir.
You know,
Now the new format and the financial statement is prepared as per line items. There are different line items given in the format. Okay. There are some headings and subheadings. First of all, we will discuss the balance sheet. Okay. Okay. So I'm just explaining these items. I will write all these items so that you can take a screenshot. Okay. So I'm just giving you an overview of this chapter. Okay. So financial statement is a statement which is prepared to know the financial position and financial performance of an enterprise or of a company. Okay.
no substitutions, right?
So there is two main objective, you can say. There are some other objectives also, but two main objective is to know the financial position and to know the financial performance. For financial performance, we prepare profit and loss, a statement of profit and loss, and for financial position, we prepare balance sheet. Now, generally the performance is measured for a certain period. For a certain period. Yes. And position is taken on a certain date. Yes.
Yes, sir.
So performance is for a certain period and position is on the certain date. That's why in balance sheet, we write as on date. And in profit and loss, we write for the year ended. Because it is for the year, it is for a certain period. That's why for the year, and as on means on a certain date. Okay.
No, that is fine. That is fine.
Is this clear?
Yes, sir.
No.
Do you have any question in this? Actually, this concept you have studied at the time of final account also. You know this concept? This is
Yes.
sometimes some knowledgeable person about commerce can ask you these questions. So you have to know this.
Yes, sir.
Okay. So this is why we write as on in balance sheet. This is why we write for the year ended in financial, profit and loss. Now, after this, what is financial position actually? What do you understand by this word, financial position? And what does it mean by financial performance? What does it mean? The financial position and financial performance.
Challenge is nothing to
So financial position is like the position of the business on the particular area.
He should not submit. Don't
Financial position means the total assets or liabilities of a firm on a certain date. Okay. Financial position, you can say that we have this much assets, we have this much liabilities, this much capital is invested in our business. This is all over our financial position.
Okay, sir.
And when we say financial performance, it means result for a certain period. Result means how much money we have earned in a certain period. So we have sold this much amount, and expenses for the sale is this, and the profit is this, profit or loss, whatever. So profit or loss amount is this. So this is called our financial performance, means result. Or you can say, you can take this as the result of a student after giving examination. Okay, because a student is learning all over the year, and at the end of the year he gives an exam, and then the result came, so he knew his performance in a year. Yes.
Yeah.
Yes. So this is what our financial position and financial performance means. Now we have to understand that for financial position we prepare balance sheet. So what is balance sheet? So balance sheet is also a statement which is prepared on a certain date to show the assets, liabilities, and capital of a company, and to show the financial position of a company. Okay, so this is our balance sheet. Now, how we prepare balance sheet? Now, in balance sheet, there is two sides. Actually, we write these two items in vertical form. So there is two sides. First is equity and liabilities. Equity and liabilities. And the second is assets. Okay.
Yes, sir.
There is these two sides, equity and liabilities and assets. Now, equity and liabilities, what it is? In this, we have to write equity, that is also called shareholders fund, and liabilities, that is external liability. Now, external liabilities is also classified in two parts, the non-current one and current. And shareholder fund includes share capital, either equity and preference, and then reserve and surplus. Now, do you have any knowledge of these words, or you don't know these words?
Sir, I know.
You know what is equity and preference?
Yes, sir.
Okay. Can you tell me?
So they are both shares.
Okay, is this the last email sent from you, Vidya, or Tarun?
Uh,
Yes.
the preference shares have preferential shares, while liquidity of
It's last email from Sandhya only then.
the company.
Okay. Yes, they have some preferential rights over equity shares.
Yes, sir.
Okay. They have preferential right to receive dividend first. They have preferential right to receive their capital back at the time of liquidation. So this is preferential, and equity share is actually definition of equity share is very simple. Shares which are not preference is called equity shares. So you just have to understand the concept of preferential.
Okay, sir.
And external liabilities, there is non-current and current. When we say non-current and current, it means the liabilities which is payable before 12 months or after 12 months. These are our current or non-current liabilities. Okay.
Yes, sir.
In the same manner, assets is also classified in two parts: non-current assets and current assets. Now it is also similar. The assets which is kept for sale is current assets. The assets which is held for long-term use is non-current assets. in simple terms, the asset which will be converted in cash within 12 months is current assets, and assets which will be converted after 12 months in cash, then they are non-current assets. So for classification of non-current assets and current assets, 12 months is important. Now, can you tell me why we are taking 12 months as a decisive item for non-current and current?
So one accounting period.
One accounting period, but generally it is called operating cycle. Okay, if we know our operating cycle certainly, then we can take operating cycle period as a decisive basis. Okay, we can use our operating cycle for this decision. So you can take 12 months or operating cycle for decision of non-current and current. You know what is operating cycle? Do you know what is operating cycle?
I can't remember it, sir.
Okay, actually operating cycle is a time period in which we purchase raw material, we convert it into finished goods, we sell it, okay, and we receive money from debtors, and then we purchase our, again, we purchase raw material. So this whole cycle is called operating cycle. Okay, so how much time we take in completing our operating cycle is also a decisive factor in non-current and current. So this is our basic basic balance sheet items. These are the headings. Now, if we go in detail, then fixed assets. First of all, we will take non-current assets. So non-current assets, there is certain items. Do you have your book right now?
Yes, sir.
Can you see the financial statement format given in your book?
Yes, sir.
Okay. So when you see the under non-current assets, there is a first item given, which is previously fixed assets. But now it is changed, I think. Yes.
Yes, sir.
What it is written? Property, plant, and equipment.
Yes, sir. And intangible assets.
Yes. Actually, I don't have book, but I know this change. It is also changed in our syllabus in what I am studying right now. Actually, in CA final, it is also changed. That's why I was asking. It is changed in your book or not? Okay, so under non-current assets, the first item is property, plant, and equipment. Yes.
Yes, sir.
Okay. And under this property, plant, and equipment, tangible and intangible is given. Yes or no? Ritika?
Yes, sir. I muted my mic. Only intangible assets are given.
Only tangible assets are given.
Intangible assets, sir.
Intangible.
Yes, sir.
Okay, so it will. It is not classified under property, plant, and equipment.
So the main heading it's given as property, plant, and equipment and intangible assets. And under it, the first one, as you wrote, it's property, plant, and equipment. Second one is intangible assets.
Yes, yes. So tangible assets name is changed. This is our tangible assets now, property, plant, and
I'm just
Yes,
searching
sir.
this one.
okay. So property, plant, and equipment. After that, there is investment or non-current investment, you can say. There is loan and advances and deferred tax assets. So these items are included under non-current assets. Okay.
Yes, sir.
Okay. The second is our current assets, and there are trade receivable, inventories, cash and cash equivalent, short-term loan and advances, the other current assets. These items are under current assets. Okay.
Yes, sir.
Now, you know the meaning of inventory, trade receivable, and cash and cash equivalent.
Yes, sir. So it's cash equivalent.
Yes. This.
Yes, sir.
Yes. So, what is cash equivalents? It
So-
includes cash. Yes.
Yes, sir.
Yes. Yes.
So is it like gold or something else which is equivalent to cash?
Gold.
Or anything
Okay.
which we can convert to cash?
Yes. Anything which we can convert into cash readily means in no time.
Okay, sir.
Okay. Actually, whenever we have some assets and when we go to sell it quickly, then we get a lower price. You know this concept that whenever you have some emergency or you need funds and you want to sell your property or anything, then you will get lower price than the actual one because you are in a hurry. Okay. So the person who is a buyer will give you the lower amount. Yes or no?
Yes, sir.
So those items are not included in cash equivalents. Cash equivalent means items which can be converted in cash quickly without any loss.
Okay, sir.
Okay. So generally we take marketable securities or short-term investment in cash equivalents. So it is cash in hand, cash at bank, marketable securities, and short-term investment. So these items are cash equivalents. Is this clear?
Yes, sir.
Okay, so the balance part we will discuss in our next class. Actually, we will go in detail. We will see the format and how to solve a question in this chapter. So if you have any doubt, you can ask.